Good morning, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It is Friday morning, October 25, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. A surprisingly strong earnings report from Tesla sparked a rally in the electric vehicle maker's shares, leading tech stocks higher. The Nasdaq and the S&P 500 gained on Thursday, driven by Tesla's positive earnings forecast and a decline in treasury yields from a three-month high, which buoyed market sentiment despite declines from some corporate results. Shares of Tesla soared 21.9%, with the EV maker set to add more than $140 billion to its market capitalization after it reported robust third-quarter profits and surprised investors with a prediction of 20 to 30% sales growth next year. Shares of Tesla had the best day since 2013. This helped take the consumer discretionary sector 3.2% higher. While Tesla boosted the tech-heavy Nasdaq composite and aided the S&P 500 to snap a three-day losing streak, the blue chip Dow Jones Industrial Average fell for a fourth consecutive session. The Dow was weighed down by IBM shares, which fell 6.2% after the company missed Wall Street's forecast on revenue. Boeing also dragged on the Dow, falling 1.2% after its largest union extended a multi-week strike. The Dow Jones Industrial Average fell 140 points, or 0.33%, to 42,374. The S&P 500 gained 12 points, or 0.21%, to 5,809. And the Nasdaq Composite gained 138 points, or 0.76%, to 18,415. The Russell 2000 rose 0.2%, breaking a five-session losing streak. The moves on Thursday came as U.S. economic data showed new home sales beating estimates, initial jobless claims dropping, and business activity expanding at a solid pace. Among economic data out on Thursday, initial jobs claims fell to 227,000 in the latest week, fewer than economists expected. Sales of the new single-family homes in the U.S. rose 4.1% in September, more than economists projected. The Goldilocks data that was broadly in line with forecasts is the best outcome for a continued rebound in stocks and bonds. Meanwhile, in Thursday's session, earnings announced before the bell included IBM, which lost 6.17% after missing third-quarter revenue estimates, while Honeywell declined 5.10% after it forecast annual sales below estimate, with both weighing on the blue chip Dow. Materials dropped 1.42%, dragged down by Newmont as higher costs and weaker Nevada output saw it miss profit estimates. Boeing also lost 1.18% after factory workers voted on Wednesday to reject a contract offer and continue a more than 5-week-long strike. Southwest Airlines lost 5.56% after earnings and after the company reached an agreement with activist investor Elliott Investment Management. On a brighter note, UPS added 5.28% after the parcel service provider reported a rise in third-quarter profit on rebounding volumes and cost cuts. Mattel shares also rallied 4.4% after quarterly results. T-Mobile shares gained 5.7% after the telecom company raised its guidance and reported earnings above analysts' expectations. The 10-year U.S. Treasury yield slipped to 4.201% after finishing Wednesday's session at 4.24%, the highest level since July. Signs of a strong economy of late have pushed the 10-year U.S. Treasury yield to new recent highs, though the benchmark yield edged slightly lower on Thursday. Mortgage rates rose to the highest level since early August last week. The average rate on standard 30-year fixed mortgage reached 6.54%. European stocks indexes were boosted by strong earnings from companies including Barclays and Birkin bag maker Hermes. Key events this week: U.S. durable goods, University of Michigan consumer sentiments on Friday. Meanwhile, in commodities, West Texas Intermediate crude rose 0.4% to $70.48 a barrel. Spot gold was little changed at $2,734 an ounce. That's it for today, folks. I will see you on Monday morning. Have a great weekend. In the meantime, let us know in the comments section what are your thoughts for the market today. Happy investing, stay inspired, and remember, it is all about money.